How much in taxes will you pay in the great state of Arizona of $60,000 of income? That's what we're going to find out here today at the Heritage Wealth Planning YouTube channel. We're going to show you precisely in two different scenarios how much your taxes will be. First scenario, we take $40,000 Social Security and $20,000 of IRA distribution. Scenario two, $20,000 of Social Security and $40,000 of IRA distributions. And it's going to be fun. So jump right in here today. So if you like what you see at Heritage Wealth Planning, subscribe down below. And don't forget to hit the bell to be notified for future content. So let's go right into this, my friends. This will be exciting. So again, as always, we go to heritagewealthplanning.com, which is my website, heritagewealthplanning.com. And you know you're here when you see the sign for my island where I was born and raised, Peaks Island in Casco Bay, Maine. So if you see that sign, you're in the right place. If you see something else, you're in the wrong place. And then we go up here to top right to tax tools, drop down interactive tax page. So tax tools, interactive tax page, and let's see what we come up with here. All right. So the federal tax interactive tool will pop up, and this is from taxfoundation.org, which they've allowed me to use on my website. And I love it. All kinds of different scenarios you can create here under the new TCJA, the Trump tax bill, the Tax Cut and Jobs Act of 2017. And then we go down here to the smartasset.com plugin, which again, I've been granted permission to use on my website, and just a plethora of wonderful tools on smartasset.com. The first one that we default to is what are the best states to retire for taxes? And we just click on your state, the great state of AZ, where I got married and my oldest daughter was born and where I bought my first house. So Arizona is near and dear to my heart. The first thing, it looks like it defaults to the zip code of 85001. And I think that's right downtown Phoenix. I lived on 7th Street in Bell, which was 85024, if I'm not mistaken. And then we live right downtown, too, on McClellan Boulevard, which is closer to downtown. Forgot what that zip code was. But anyway. All right. So now we got $20,000 of Social Security income and $40,000 of IRA distributions. And as you can see in this scenario, we pay $662 in taxes to the state. I got to write this down because this will be going into my book on the state-by-state tax guide for retirees. So $662 to AZ. But then the feds charge us $28.71. So our total tax bill is $3,533. All right. So in this case, $60,000 income, we lose $3,500. And do have my trusty calculator here today. So we're going to lose $3,533 divided by $60,000. Our effective tax rate is 5.8%. Not too shabby. Not going to get any griping from me, but still, I wonder if we can do anything to reduce it. Oh, the answer is yes, we can. Let's move this out to $40,000 Social Security. All right. $40,000. Now, one guy commented it's Social Security, not Social Security. Look, man, I talk fast. Don't get around that. So when I say Social Security, it's Social Security. It's just I do talk fast. So I recognize it's a 2-syllable word, just FYI. All right, then we got $20,000 of IRA distributions or 401k or TSP, qualified retirement plans. And then, again, I forgot to tell you, we're born in 1952, which means we're taking advantage of the $26,600 in standard deduction, and we're married filing jointly. Okay, so then we hit enter and watch the difference, my friends. We got only $131 of taxes total. That's it. $131 of taxes, all to the state of Arizona, none to the feds. But Josh, how could that be? That doesn't seem right. I think your tax stuff is messed up. And as always, I'm going to show you exactly what we have to do to figure out what your tax situation is here in the great state of Arizona. The first thing that you have to do is you got to take your provisional income tax, which is half of your Social Security, plus this amount right here. So in this case, we got $40,000 is our provisional income. All right, so we got $40,000 to write it on our board here. And I'm going to bring this guy up so you can see it better. And so your provisional income is all of your income, and that includes your tax-exempt income as well, interest as well, plus half your Social Security benefits. So in this case, our provisional income is $40,000. Now there's 3 bands that you got to account for to figure out how much your Social Security will be subject to taxation. Band 0 to 32 is nothing. So any of this number, 40,000, the first 32,000, none of your Social Security benefit will be taxed, none at all. Then from 44 to 32, 50% of that amount of any amount from 44,000, from 32,000 to 44,000, 50% of that amount will be subject to taxation. Then anything over 44%, 85% of that amount will be subject to taxation. Okay, so here we got provisional income of 40,000. The first 32,000, none of your Social Security benefits are subject to taxation. In this case, the next 6,000 or 8,000, because we got 32,000 total of the zero, but then we still have 8,000 above the 32. So we simply take 40 minus 32. That gives us 8,000. So 8,000 will be 50% of that 8,000 will be included in our Social Security taxation. All right. So now we go to we take 8,000 minus 50%, which is $4,000 of our Social Security is taxable. $4,000 of our Social Security is taxable. All right. Now we take all of our other income. In this case, it's a $20,000 IRA. All right. So we got 4,000 from Social Security. 10% of our Social Security benefits taxable. $20,000 IRA, which total our adjusted gross income is $24,000. $24,000. All right. So again, $40,000 total of $20,000 IRA, $4,000 Social Security, $24,000 AGI. Now, what does that tell you? Well, we're not done yet. We got to figure out our taxable income. And our taxable income, because we are over the age of 65, 64, we have $26,000 of standard deductions. So in this case, we got $26,000 of standard deductions, which wipes out completely that $24,000 of taxable income, which means we have negative tax of $2,600. Our taxable income is right. Actually, I probably should put that taxable income. You can't really see that writing. Taxable income, $2,660 in the negative. We owe no taxes. In fact, we have a negative tax of $2,660. We're not getting that back. But just as an FYI, if I have negative to limited amount of taxable income, I'm starting to move some money to Roth IRAs for sure. Now, watch what happens when we convert. Let me go down here. You're saying, well, I got $2,660 of negative taxable income, So what if I convert $2,660 and put me at zero of taxable income? And that would make sense, right? So now I have $20,000 IRA distribution to live on, but I'm going to convert $2,660 of my remaining IRA to a Roth. That way I can get a taxable income of zero. Well, watch what happens. You're going to find, what happened here? So my income tax to the feds went from zero to $399, and my state tax went from $131 to $200. So that's 200 minus 131 equals $69 plus $399. So by converting that 2660 to 660, we got 468 divided by 2660. I've actually increased my taxes by 17.5%, even though I thought I was going to be in a 0% tax bracket. Why is that? Because what happens, this is the double hit on taxation from Social Security and any kind of IRA distributions in particular, but any kind of income. Because what happens now is not only is our adjusted gross income increasing from our amount of taxation due to IRA distributions, but it also increases the amount of Social Security that's subject to tax. All right. So now our provisional income is not 42,660, which means we actually we're being taxed not only on regular income, but Social Security income as well. We are being taxed twice on the same dollar. In fact, you can run these numbers out, and essentially until you hit about 75,000, I think, of provisional income, every dollar you pull out of an IRA will actually increase your taxable income by $1.85 because of the Social Security structure. Because you're not only just paying tax, increasing your income tax on your IRA, you're increasing your income tax on your Social Security as well. So that right there, that $2,660, and including IRA distribution of $20,000, increased our income taxes by basically from 131 to 600, basically by almost 400%, because now we're paying more tax on Social Security and we're paying more tax on our IRA distribution. I know it's crazy. That's the freaking tax code right there in large about how it can get you twice. It not only gets you on your income from your IRA, but it actually increases your taxation on your Social Security as well, with 2 forms of additional taxes, even only $1 extra income. It's insane how the tax code is like that. So be careful. Still you're paying $600 in taxes on $62,600 of income, but on $60,000 of income, you're paying $131. All right, so I'll let you to be the person to arbitrate if that's worth it or not. I think it is, but that'll be up to you. So as always, if you like what you see here, by all means, you can run these numbers. Go to Heritage Wealth Planning Tax Tools, interactive tax page, and play them out around to your heart's content for sure. Don't forget to subscribe at Heritage Wealth Planning, the YouTube channel, and subscribe, and then click the bell to be notified for future content. Thumbs up always helps me with the YouTube algorithm. And of course, comments always welcome as well. We'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks now.